Wake up, goddammit. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
Really good. It was overall a week for selling some things that I'd been holding for a while. Like net was a huge one for me,
God.
and it's one of those. It's a little bit. I didn't. It wasn't as big as the Roku position, but I had quite a bit, and for it to make a move like that, felt like selling options, and that's always a good thing. Good feeling with shares. Crypto thesis played out just pretty much exactly as we thought. We had a different approach to how to trade that, but it all worked. It's all the names that we were on. We were on the best one as our big emphasis, I think, in CLSK, MSTR. On the other side with the large one, so that was great. And yeah, I got back into a couple other ones. Elf. I mean, just a lot of stuff is setting up pretty nicely. So even with Q's and Spy, grinding up at all time highs and a lot of that tech being at spots where I just really can't comfortably buy it, even option side, there's still a ton of stuff out there. And I think our sector focus is going to really pay off. A lot of people are doing well, just going long every day on semiconductors and stuff, but that doesn't last forever. And our broader approach is built for whenever the pullback does happen. So I think that'll serve us well.
Definitely. Good week for me. We started off with that bowling. The Friday drops. Usually try to find one of those for myself. That one was pretty comfortable with just because of the way the market's been going and the read from you. Uh, Overall, after that, though, it was a fun week in the regards that I got to trade stuff that I actually like. Like, if I was picking teams or winners and losers, the Fubo and Redfin dip, I mean, I've been on those charts forever. Those are pretty easy for me. And then Roblox hymns and the new one ARM, all pretty good plays. And it's just stuff I enjoy trading. Sometimes you trade some stuff and it's like, oh, I'm trading this, or like I don't want to look into I don't want to look into oil. Like I don't care, like it's just kind of boring. And we talk about that on as a positive a lot of times, but mentally it's just not fun. So a really fun week in that regard. And then crypto hit. Um, I posted the note in the room. Like I just try to keep it simple. I have a range right now, and I always share my range. It was 42 to 45. 42, we probably bleeding out. 45, we probably running. As soon as it hit 45, kid in a candy store there, and they perform so well. All the smalls that we've been on over the newer smalls we've been on over the last, let's say, 6 months, those things have so much range. Um, so Friday I kind of just took off because I was in that less is more mindset, hit the goal, and just felt easy. So I know a lot of people haven't experienced the Friday Unk hit his goal, but we had a little bit of that going on this week for sure.
Yeah, yeah, definitely. And once again, with crypto, I'll just to stay on that for a second.
Yeah.
Thing now is the thing about crypto and crypto Twitter is a lot of those people are bullish all the time, and so they're kind of their "I told you so's" when stuff goes up. They're already bagged on a lot of those if they have the stocks. They held it the whole time. Whatever. So, but that's a lot different than what we're doing. And the when people start talking about Fibonacci extensions and you know CLSK going to $80 and coin going to $800 and shit like that, that kind of euphoria and that kind of mania um, is a situation where you want to have some left that you can get rid of instead of just constantly re-entering. So I will have some crypto. I will have some crypto notes. If you completely sold and got rid of everything, you did well, and I wouldn't really worry about it. But yeah, you're going to need some pullbacks. They all pull back, and so it's just about finding some new spots. And on the option side, maybe that's a little easier to re-enter because you do see some um, coalescence around particular option strikes, MSTRs. It'll be round numbers up here. Coin, I've got some spots at 132 and 120, stuff like that. But it gets harder, and I think you have to go smaller. The spot to have loaded big positions on those smalls, I think you should have already done that. And now we're just going to kind of see how far it can go from here. A 50K, very possible though, within a couple days. I think that could certainly happen.
I I like the crypto Twitter combo because it fits my, I guess my historical view of Twitter. Like you used to always say, like when we first started the room first year, I would say I follow Twitter for what not to trade, and that was just to
Yeah.
get people off other people's stuff or asking us questions. Well, this guy just said this. Like I don't give a fuck about that guy. And then that evolved into I use them as my exit. As soon as they start talking about it, I'm out because we're already in. We're already in, so I'm
Yeah.
out. I'm out when they're on it. That means that's their high point, like the Starboy theory or whatever, right? Like that's got to be the
Right. Right.
top he got in. Um,
Yeah.
so like using those two as a, what do you want to call it? That's kind of like a parallel works really well for me. And then just sticking to my, like I said, I know our theses are different on it, but it's pretty much similar. I mean, you have a commodity, the Bitcoin. I mean, it's not off Ethereum or Doge or whatever. Um,
Right.
when
Right.
it gets into a price range, these just run. And I think the negative for me is Mara was $6 when we got on it. CLSK was $3 when we 330. That's our channel. It's
Yeah.
the lines on the chart. So it's like I'm psychologically on the other side of that. So I have to kind of scalp those, which I'm fine with because I've already put in the work. I know how the level two, the stuff that they do in level two on each play, I kind of know. I know what to look for. But really what works for me there is just finding that support. Even if it's just 20-day volume profile and Bitcoin starts moving. Um, but they're fill your cup plays. We're not holding. I mean, at least I'm not. Even at MSTR, I'm not trying to hold any of that like it's going to be a successful company. It's literally a pet rock that you can't take out of my wallet. Like I've said before, that's the allure
Yeah.
of these
Yeah.
charts because I'm not going to. I've never traded crypto. I don't trade options. I'm sorry, kids. I'm sorry. I'm an adult. I'm just an adult. It doesn't work for me, and it gives me access to that market, and I just think it's a little bit safer. So 50K though, yeah, that should probably be a discussion at some point.
Yeah. Um, yeah. And so, yeah, with MSTR, so I have some shares in the 270s and holding those. And I had kind of a separate basket off our spot, like the 480s there. But with it moving over 600, I think if you do want to give it room, you set your stop a little below 600 because it's probably going to test psychological level. But if you're thinking, oh, I'm going to get this going to go to $800, it definitely could. But I think for a couple shares, you're just kind of pushing it at that point. And I like the company in terms of what they did because if they just stayed being a software company, they were kind of a middling SaaS company, and this stock would be like $60 or something like that. So their big bet on Bitcoin, paid off beautifully. The way they manage it, all that stuff, like they've done really well. And another thing I'm learning about these crypto companies are changing their accounting practices for how they value crypto assets in a way that makes them look better. I'm not even saying it's deceptive. I'm just saying like the way that they count for crypto as part of what they do. So that was a big part of CLSK's earnings, and it's definitely something to look at going forward. And with coin coming up, coin earnings coming up soon, that's certainly something to watch as well. And I guess I'll transition there to talk about earnings in general. We kind of saw the move on ARM, not maybe to that extent, but ARM was a situation where I hit my price target for, I don't know, the next 18 months in a day.
Yeah, yeah.
And that it just kind of shows you that, with a lot of this, you find a way to get a piece of the work. Like we talk about that. I didn't have some huge arm position, but again, those positions feel pretty big when they go when they go off like that. And what I'm seeing in earnings, obviously, you're in a lot of kind of semiconductor mania, um, but there are semis that are not doing as well. And I think one thing to look for is the ones that take a pretty big drop, because they do actually recover fairly quickly. And RMBS and Texas Instruments are two recent examples. But I would just encourage people to kind of read, especially the guidance on a lot of these names, because that's what's sending them, and that's what's tanking them. Bill, who's a SaaS company, they popped 20% on the numbers, and the guidance came out. They finished down 13% on the day, Friday. So that one sentence in guidance can really tank some people. If you're in earnings plays as a lotto or something, you love that range. You just hope that one of your sides holds on it. But I think it's really important for people to stay mindful of those reports, especially the ones that drop. Where are they dropping to? What's going on in the sector? Is this a level that can show some strength? And can you at least get that kind of that mid candle recovery? Because rather than chasing the stuff that's been running every day, those are the setups that are going to be safer. And I think a big thing that people want to look for.
Um, I'll save that one for later. The arm's probably gonna do the most of this here. The arm, what's it remind you of? Anything off the top of your head? IPO wise, similar IPO.
I like Rivian.
Yes, perfect. So Rivian's a
Yeah.
great example of exactly. No, 100%. It has that lockout. It has that people know what it is already. It has all of that, and that you just have to be mindful of that and go ahead and take your money. The problem is for me on those, probably the same with Sphere as well. Is they're so new, I really scale in over time. So I'm only getting like 20, 30 shares of that before these moves happen, which is fine. Like you said, you got to get a piece of the work. I think
Yeah.
a lot of people are sitting there thinking, where do I put my full position? Don't do that. Think, where am I going to put my full position in the next 6 months? And if the move happens, you just take it. Just take it off the table. There's no really reason to hang out in an IPO at all because they're gonna check back or they're gonna get a news. They're gonna some of the stuff they do is gonna get digested. That IPO is just a hopium. You're running on hopium. You're running on all of that. You're running on people wanting to add it to their stuff and never let go of it. And yeah, some of those people are going to get bagged just like Rivian, I believe.
So
Um,
yeah, so we another one. Now, this one has got earnings coming up too. Is a Cart,
yeah,
and so with Cart, we caught a great spot on that in the low 20s. I was like 22.80, I think was my average on that. Popped, over 26. I got out, I think, at like 26.60. Ended up going near 28. It checked all the way back down under 24, and now it's 26. Going into ER, but I mean, there's no way I'm going to hold through a pullback like that on an IPO. And I think people, particularly with semiconductors, I always talk about how I don't think the people who are trading this stuff every day know what they are.
sure.
But they still, there's a kind of a cult following that they get. They're like, these companies are the future, and I'm part of the future, and it's exciting. And so the people who bought ARM, even like the people who bought it and are green on it, but still bought it after the pop. Like let's say you got some at 95 or 100 or whatever after hours. You chased it. It's at
Bagged,
115. You're
bagged.
feeling great. You're gonna get bagged. It's
Yep.
gonna be $60. Now the question is it gonna be 60 or is it gonna be 50?
Don't
Or is
know.
it gonna be 40?
Couldn't tell you.
Like we don't know. And then but whenever we start to figure that out, we're gonna be back. We're gonna be back on it. It might show up in my stuff as like a volatility trade, the 20-minute trade I talked about, or whatever. But But we had put the work in. We got the win. We took the win. If you don't feel like you got enough, never would have felt like you got enough. I mean, I don't know if you had 100 shares of it, you still would have been like, man, if I 500 shares, imagine, I mean, that's part of the psychology I think you got to get over. And the easiest way to get over it for me is find the next one. Um, the next one for us pops up 2 days later. So
Yeah.
work continues.
Even when it's 183 shares in NVIDIA damn near at the bottom, it ain't gonna be enough. I'll tell you that personally.
Right.
It is, but it isn't. I want to get this point across real quick because it's something everyone struggles with when they enter a trade or when they're coming up with thesis. But day traders do not listen to investors. Investors do not listen to day traders. And then in your own head, don't take your day trading strategy and mix it with your investing strategy. Don't mix your investing strategy with your day trading strategy. You got to figure out who you are. And if you want a happy middle ground, you're going to be a swing trader. It's probably not going to be options. Um, I personally am skewed in that. I think everyone eventually arrives there. That's just how I think if you hang out long enough, that's where you will be. Um, but a lot of people I see, they'll go up 10% when that was the trade, right? Like that was the cut fill, and they're like, what do I do? We're good now, right? The future of this company's bright. It's like, no, we're day trading here, bud. We're
Yeah.
just taking a
Yeah.
percent, a positive move. We're filling our cup over and over again. We're compounding gains brick by brick. Sometimes they're base hits, they're 10%. Sometimes they're doubles and triples, 20, 30, 40, 50%. Sometimes they're home runs, 50, 100%. And you just don't care about anything but getting on base. And
Yeah.
yeah. I don't know. I don't know
What?
baseball analogy. Are they taking extra pitches? But you just got to get on base and move on to the next one.
Yeah. No, I completely agree with that. The option side of things, I think option only, very hard. Not something I recommend to anyone. And I mean, you see what I find. I find stuff that does well every day, but still, I mean, that's a lot of pressure on yourself to do that. So the more that you can reduce your exposure in options, or you get your money and get out. I mean, I think that's great. I personally, look to build to a point where these moves of 3-5% that I find consistently in SaaS stocks or healthcare or whomever, that I'm just loaded large in shares there,
Mm-hmm.
and grab my 5% and I'm out. And that 5% of a share position is enough to do this and make this work. So I mean, that definitely is a goal for me. That options are, I don't want to call them like a necessary evil, but I mean, it's sort of like that. They're dangerous, and so you want to not really get sort of hypnotized by the multi baggers and all that stuff, and think about what is it I'm really trying to do here, and just kind of keep working and keep building towards that. So yeah, I'm with you there. Options, I would say, maybe like not everyone reaches a point where they stop using them, but you use them differently.
Yes.
You sell them, or you're in leaps that are kind of deep in the money, and I'm already doing that with the smaller ones. Want to get to a position where I'm doing that with the bigger ones, but at why would I want to, just as an example, something like PBR? Okay, I was on PBR
On PBR.
well before this move, and I talked about options on it. But why would I buy 20C on PBR when it was $13 instead of just buying a leap in the money? You can just keep through the whole move, and it's not going to decay it on you at the same rate. Because just going far out of the money on that, it looks silly, but it doesn't look silly to people when they do it on the large caps, because they're like, well, I don't want to spend
Yeah.
$1,200 on an option contract. I only want to spend $200. But you're letting the price of the contract, rather than the setup and the risk, dictate what's going to happen, because it's safer to actually be in something way more expensive than to just take your $150 and incinerate it, a couple weeks later. That kind of risk that people take on, really just wrecks any good work that they're doing. They're constantly starting over. They're constantly reloading their accounts, and it's not sustainable. It's not going to help you. It's not going to help you grow. The small account challenge culture is terrible. I absolutely cannot get on board with that at all. And that's the most common thing that you see among these option traders.
uh, Not to jump too far back here, but it's just the best example I have. I said the problem when you're early is like when it gets to running later, you have a problem with the price. And CSK is perfect in that regard. I mean, we were on that at 3.30 and $4. It made 200% moves.
Yeah.
One over the summer and then one in November. So like for me, that play's already over in my head. It's real hard to buy anything but like maybe 100 shares in here up above. I mean, even your 750, that was a real hard spot for me to enter, and you were pretty adamant about 750 here about a week ago. Um, so being early and in that mindset is more important than just like chasing. And I think where that comes from, I know it was a horrible point, but it's going to prove this next point better. Where that comes from for me is I think where we all started, and you just touched base with it on the $1,000 challenge account. Most people start
Yeah.
with $1,000 trying to get PDT. I mean, it's generic, but let's just kind of use that as an example. My whole thing, I started working as a business, like trying to protect my money. So when I converted into day trading or into trading, like I'm going to trade because of, I had time around COVID. Um, it was basically I'm still swing trading. I'm still doing what's always worked for me. But since I'm here, let's trade a little bit. And most people are the other way. They're like, I'm here. Let's make $500 in 15 minutes. That's where they start. And you need elasticity. Elasticity. I don't know if you probably had a better way to say it, but you need to pull away from where you started and kind of find a good middle ground. And it's real hard to get out of that. I'm gonna only take 500, 1,000, 2,000 bucks, and turn it into my whatever Lambo house,
Yeah.
whatever you want to turn it into. And the problem also with that is when if you do start out with $1,000 challenge account and you get to two or three, your confident ass is gonna think you can just size up, and that never
Yep.
works.
No.
You've traded with me for years. You know what I trade with. You know my sizes because it doesn't change, and it's not. It's protection. It's that commonality that I think you need in trading, and that goes with. I mean, you can go across the whole flipping board with like the price of the contracts, the price of the stock, the sector. That commonality is what's going to keep you in this long term. So I think a lot of people just kind of need to focus on who they are a little bit more instead of FOMO, because that's really what a lot of people spend their time on is it too late? No, it's never too late. But
Yeah, and on the sizing, especially with the risky stuff, consistent sizing is the kind of the golden rule. I mean, on SMCI, I don't unless somebody bought that for 40 or $80 and held this whole time. I don't know of a lot of people who've done as well as we have here on it. And like Goose and I trade that almost every day, but it's like it's like one contract, two, maybe four, and that's it. Even though like the win rate is damn near 100% lately on that thing, if you were just still if you're sizing up every single time, what you're gonna hit six in a row and then wipe it all out in one trade.
yep.
That doesn't work. You can't do that. So um, that you got to have that discipline. And if you can't do it, if you don't have the discipline, um, knowing that about yourself is such an important thing. And just turn off your option permissions and go to shares. If you really do struggle with that, and I've
One
seen a couple people blow up that couldn't manage to see that.
one of the big things that helps me because I really don't. I mean, most people can get an entry. It's not taking the exit that kills you, especially on option size. I mean,
Yeah.
not everyone's Starboy and High Point and options. I mean, that's If so, just yeah, turn it off like you're saying. But what really helps me is again, and I stress it over and over and over again, is the pre-planning. And simply when I enter a position, I do the math. What's 10%? You know, 200-300 bucks. Oh yeah, perfect. So when I get there, I feel like I won. I'm not feeling hopeful like I need more. Is this it? I already had a kind of a target in mind, and I try to keep it small because it makes sense that if I do that over and over again, I'm going to have a good week. And and I think a lot of people miss that step of the planning is, all right, I'm going to enter here. It looks good. I found support. But where are you going to? Do you just get in your car and start driving around and then figure out where you're going? Or do you have a plan before you
Yeah,
get in your car? I mean,
right.
I'm from the 90s, so I'm printing out MapQuest before I go. I mean, that's just what it is.
Hey, I've got those pivots for a reason. I like to trade to them,
Exactly.
and I
No,
just say to it, not through it.
yes, yes.
And even though, is that pivot gonna flip and it's gonna go higher? A lot of times, yes. But the thing about it, it's like a magnet. It'll let you back in. You can wait and see if it's gonna have strength there. Coin parked around 132 all day on, I think it was Thursday. I had already been out of the stuff from 120. You get back in or you keep a little bit, whatever. But that on that spot, I'm like, it gets here, I'm getting out. If it gets close and it's not going to quite make it, I'll go ahead and get out too. But the point is the trade's green, and you've already kind of got your finger on the sell button. So
I
that's really important for winners.
I've said for years. I mean, I preached it to you. You can re-enter. You can re-enter.
Yeah, yeah,
That's gonna that needs to change. I need to say that differently, and that's kind of the back part of the plan that lets you take that 10% because you can re-enter. If it's a good trade, you're going to re-enter. If
yeah,
it's a good trade, it's a good setup, everything you thought was right, you are going to re-enter. Only thing you're not going to re-enter is something that you got lucky on. You got away with. Like
yeah.
you caught a move that was not real and it's going to fall apart. But if it's a good trade, a good setup, you are going to re-enter. It's not one trade. Quit making it one trade. I mean, I don't want to use SCMI. I'm sorry, I don't trade that one much. But yeah, I only want to use that. Yeah, how many times you trade coin in the last, let's say, this year? Let's just go this year because I don't want you to say hundreds. How many times you traded coin this year,
Yeah,
T? I mean,
it's average about 4 a week.
yeah,
So
exactly,
yeah, yeah,
exactly. How many times did you hold? You held off 70 or 72, 75 ish area, correct?
yeah, yeah. Hmm.
How many times did you do that after the run?
I had one other. Well, I did at this 120 area. That was like my second time actually holding for kind of a more extended period.
Shares?
Um, yeah, yeah. I
Okay,
had some
okay,
shares. Yeah,
okay, okay. Yeah. So see,
but
so
like,
so so you just went from 4 a day to once every 60 days. I mean, it's
exactly. Well, yeah. And, well, Roku's the good example of one that was twice in full. And we talked about that one. That was a hard one for me to leave, but
you're welcome.
I'm glad I did.
You're welcome.
And then yeah, and then um, the pivot came back, entry came back, and go again. So yeah, you're going to see a lot of that, and some of these SaaS names that are kind of in the stratosphere. Going to be hard to see some of our pivots again. You're not going to see Snow 132 or anything like that coming up. But I mean, there will be pullbacks, and there will still be opportunities for a lot of those, unless we just enter a full on bear market again, which I don't think either one of us sees right now. So um, yeah, you're just going to trade the uptrend, buy the pullbacks, and again, I just want to tell people that the where the rest of the sectors are in relation to tech, it's the widest divergence it's ever been,
Yes.
and people look at that as like a sign of like market being unhealthy. It's hard to say that. It's kind of all relative. The stock market today is very different than it was 20 years ago with options and
Investors are
just
different.
yeah, and the way that funds work and ETFs and all that. But the point is that there's a lot of opportunities in those other sectors. And it's not, you're not just, buying something that's just, in the ditch or in the dumpster. A lot of those are just kind of flat and stagnant, and gaining some momentum, to get stronger and go higher, because it's not that divergence didn't happen because Nvidia's to the moon and Coca-Cola's $40. That's not how it works. It's just Coke's been flat and Nvidia just took off historically. So I wouldn't put too much stock in that big divergence, except to say it's time to kind of look at some of those other sectors, and because there's some pretty safe setups all around.
I think even, I mean, I'm not super historical market guy, and I really don't try to be one, but from there's my basic knowledge. I mean, I'm 40 years old, so I got a couple decades in me, but through like the 80s, from my birth date to the 80s, maybe into the 90s, it was all the dividends ruled the world. You wanted to be
Yeah.
in dividend stocks. And we came out of that with the .com euphoria. And then that switched over to, maybe mid 2000s till now, where the companies stock that gave good stock compensation were the ones that you wanted to be in, because they were worried about getting the stock price up because of their employees. It would benefit their employees. And now we're seeing another kind of run out of that. And those cycles are big. They're like, 10-year cycles, 20-year cycles. Like it's not going to happen over the summer or over a quarter or anything like that. I think that's kind of where we are right now with the semis. Is they're just not necessarily the .coms. They're just the most attractive thing to be in because they fit every aspect of the last cycle. A point I definitely want to make on that for people, are that and our sizing and our pullback. One of my best friends works for T-Mobile, and he doesn't really day trade at all, but he's definitely involved. And they offer shares, I believe it's like 15% below whatever date, once or twice a year. So he gets them for
Yep.
15% below, but he buys every single flipping penny he can of that, and then he sells the shares he has currently, right? Like a rotation, because you have to hold the ones
Yep.
that you get for a certain period of time. He sells those ones. But in his head, that's the pullback. That's just the pullback. So when the stock goes to that price, like if the stock pulled back 15%, which T-Mobile doesn't really pull back 15%, he just
Yep.
buys it outside on the market because it's ingrained in his head to buy pullbacks. And I think that's a good thing to get across to people. If you do believe in a company or you do like to trade a company, is you just have to be confident in where that oversold, that that bounce should come from. I can't give no better example for me than how I trade Tesla. I mean, I do not
Yep.
trade Tesla every day. I've been with you for 3 years. We've talked about it maybe 5 times. Like this is where we're buying. 4 or 5 times is it. And you just got to do that, and you can do that on a smaller level, um, with other charts. Everything's going to be different, but that's just got to be your mentality. Is where is this oversold? I say oversold because that's just works for me. But where is this too good of a value? And I said it to you maybe 3 weeks ago, like $100,000 car you buy, and you're like, hell no. Well, what if it's 80? What if it's 70? And at a point,
Yep.
you're yes, and you got to figure that out in your head. And that, I think that will help traders tremendously, um, in the long run, because that's really where you want to enter on anything that's not going to stop.
Excellent point. Um, let's talk. Let's talk natural gas a bit.
All right, let's do that and get into the spot. Let's do that and get into the spot. All right.
All right. So, natural gas. I had said um, months ago. I was like, if it's over 230, 240, something like that, I'm not really that worried about it. Well, it's $1.84. It's below. It's below its COVID low, or thereabouts. Monthly RSI is about as low as it's been a long time, since 2020, and then a couple other times in its history. So yeah, I mean it's oversold in that technically, but it's hard to find a bottom on this. And while I do see bullish flow coming in here and there, kind of feel like they're just sort of saying, I don't know anything, but they're just kind of like, damn, this is cheap. Give it a shot. And like I said, they're going out to 2026 on it. So I don't have a clear idea of when it's going to turn around. But I will say though that The oil natural gas combo stocks is actually where I think people want to look rather than natural gas itself, at least for now, until it gets itself back over $2 and starts making a move 253. Because this is just a disaster. I mean, and you just don't. I don't think you really want to be in a downtrend like this in any kind of commodity.
Well,
Because look what happened to lithium. Lithium just
yeah,
kept falling.
yeah.
I mean,
Well, we all know commodities are basically like market price controlled by the people that control the markets. I mean, that's obvious. And
yeah.
natural gas 100% is and the high and the low is manipulated because of the conflict in Ukraine. Um, I mean, they blew up a pipeline. We all know that now. It's common knowledge. Um, my son's in the military. He's moving to Germany. Our U.S. military is giving the soldiers in Germany $600 to $1,200 stipend just for energy. Well, they were last year. So
Yeah.
I really think we're making up for that and kind of like using it as a political or a war tool right now. I really do. I don't think it's coming back until that conflict resolves itself in some regard, just because
Yeah.
it hurts Russia so bad. I mean, that's like our only thing we can really sanction them on is because they supply Europe with a large supply of their natural gas, and it's
Um. Yeah. Yeah.
and we're
I
at
mean,
what
what?
we're at
Oh,
50%,
go ahead.
right? We're at 50%
Yeah.
of what it should be.
Yes. Easily. And I mean, oil arguably is what ended the Cold War too.
Yes.
Um, Similar kind of move. So yeah, I'm with you
Yeah, well, I mean,
that's
we
occurring.
also have the gas lines of what 70 was it 72?
Yeah.
And I mean, yeah, you're going to have that high and low. It's going to be extreme, and we saw that. Remember, natural gas was like $9. It was like nine
Yeah.
dollars at one point in time, and so I really don't try to mess with that because you're when it levels out, you're going to have plenty of time to get in there.
Yes. No. Right. And what I'm thinking with a couple of the names I'm after is that I think that they're gonna be fine just with the oil side of things. But if you're already in it at these prices, when natural gas does turn around, um, they get really explosive. And so then your kind of core position, that's where you get your 20, 30, 40%, like we've done with Sandridge or Comstock or
Yeah.
uh, Tell back when Tell was good. So I'm in that kind of mindset of those are kind of the setups I'm looking for. But yeah, the natural gas itself, I don't even trust the flow on it because I think they're just doing what traders do when they see something that's just in the ditch and they're like, well,
Yeah.
I'll just take a shot. I'll take a shot here and see what happens. You want to do that with them? I mean, it's not going to really might work. You
Buy
just might be
time.
stuck in that position for a long time.
Buy some
You're just,
time.
yeah, you're just locking up your money there. You want to just buy it and forget about it for a couple years. I think you'll be fine. You might need those couple years for it to really do something for you.
I call them boring stocks, and blessed that I have you because you introduced me to all those. But the what as simple as I try to keep things real simple, man. And those stocks aren't going to go 400-500% like your Teslas and Nvidias can, right? They're not like your crypto
Yeah,
stock. They're just not. They're going to go 40%, but you're going to be able to get on that bus. It ain't a speeding bullet train by you. You're going to have time to hop on there, and
yeah,
40-50% is still going to be good. The big winner might move 100 of the sector, right? You might get something to move like Oxy did a year and a half ago,
yeah.
2 years ago. But yeah. I think you got to understand that. And that's why I stress the boring because you're not gonna make $1 million, but you're not gonna cut your legs off either.
Right.
So again, wait for the train to get there. Don't stand on the tracks looking for the train.
Exactly.
Perfect. Let's do some spy and get out of here, P. I don't want to talk about last week. I'm glad I did the 500 close. Well, that's the only thing I was right on the 500 close, just a melt up. Um, the ER's pretty much led the way, just keeping people involved. But 501.65 on the high. You had 501.39 quarter, flipping quarter, buddy. And 49, hold on, 490.23 on the low. You had 488.48, so you were like 70 cents off there. I was a buck or two on the other side of you each way. Um, perfect, Pete. Perfect last week.
Oh, thank you. Yeah, it's kind of getting tricky on the option side of things. Kind of having to dig a little deeper because, well, here's sort of what happened. There are basically millions of contracts of open interest in puts that are going to be worthless, and they're just kind of clogging up the whole outlook right now. Everything from the 400s and 420s and 430s into March, 410 like 410 March 28th. It's hard to see those as being realistic positions at this point. They're just kind of bleeding out. They're all kind of moving to the bid side as people just sort of take a shot. So I just kind of look in some of these individual bigger orders to get a picture, changing how I read this a bit. So
Can I ask you?
so I started doing that.
Can I ask you a question on
Yeah,
that real
right.
quick? Where do you see pullback to help those people at? Like, how far would you have to pull back to help out 410s?
Um, if it's the end of March and to 410, I think you got to get to like 450
Oh,
or
jeez. Okay.
something like that.
Okay.
So I mean it depend of course depends on what they bought it for, but it's like $30, and I mean, yeah, it'll move to $60 if you drop 10 points from here, maybe. But for them to actually get out, it would be pretty catastrophic for
Okay.
that to work.
Okay.
All right, so then so instead I kind of look at premium orders in kind of in the millions. And there you've got to filter out what's called these cross trades, where they're just kind of like passing the hot potato back and forth. Nobody's really looking for an advantage there. So I look for the floor traders instead. And so one thing I'm seeing here, I've got sold puts for July at 495. Um, that's a pretty significant bullish bet. Um, I mean, clearly, I think we'll dip below that,
Sure.
but I think that's going to be that might turn into kind of your fulcrum for the rubber band, where you're just if you pull too far below it, you're going to shoot right back up to it. You go too high above it, you're going to pull right back down. So 495 is a spot, given that they opened that this week, that I'm interested in for my low. I'm going to go a little bit below that, and I'm going to say 492 would be my low. And then for my high, man, this gets tough at all-time highs because I kind of I zoom out, but I'm like, well, that doesn't do anything.
Doesn't
For
do
me.
shit for you.
Yeah, right. um, I'm gonna say 504.89.
Interesting. The script. I gotta say, this script I built uh, is made for uptrends. um, I have 470 as a 1 in 3 year volume profile. They're checked out. You're about to break out on both of them. Obviously, you're breaking out on the 10 because it's all time high. 470, this shelf right here is probably my we need to get back there at some point in time. 475, 470. I don't think it's this week. I'm glad you spit your numbers out so you can't steal my information and make perfect entries again. But we have CPI, PPI this week and earnings, so I don't think it's going to be a disaster. Super Bowl week is usually good, brings a lot of euphoria with the commercials into some names. I expect Budweiser to do good next week, stuff like that. I'm going to have to stick with 1 year volume profile, or excuse me, 20-day volume profile, 487. Ain't going to lie, it's close to your level and it's a little bit below. I do think we ran hot last week. That top end, though, is a flipping coin flip. If there was ever a time I was going to use Fibonacci's, this would be it, because you do just kind of want to take a percentage. Other than that, they're fucking useless. Um,
Yeah.
I'm gonna. The problem is I want to go under you here, Pete, but we're at 501. So
Yeah. Yeah.
$3 to the upside seems like a foolish upside for me. I think I need to go a little farther. I like how you stopped right below 505. I think that was tactical in a psychological level for you. So
Yep.
I'm gonna have to go a little below you at 504.69, because I agree with that. I agree that's going to be an area that feels like too much. But it's the way SPY's built, and the market in general. The market sheds losers. They go OTC. They go out of business, and the winners stay. So you just have a pool of winners that keeps moving, and that's why historically SPY just keeps going up, because it shakes off the dead weight. And I think like a lot of people don't see that. They think 480 or there's just a number that SPY should be at. No, it's going to go up forever and ever and ever and ever. This may be a little fast, 25%, let's say 5 months. That's probably a little quick, so expect pullback. But the overall trajectory of it, you're not stopping SPY. That's what it's built
Yeah.
for.
I posted the monthly chart the other day on
Yes,
SPY,
yes.
and basically to say, kind of, this is how hard it is to
You have five
to
candles.
short this.
5 candles, you could
Yeah,
trade it.
right. And the bigger sell candles, even during COVID and all that, they have these fat wicks on them,
Yep.
and so there's a lot of fight there to bring it back up. Whereas the green candles are just kind of smooth, and yeah, that recent drop we had, the whole the 2022 bear market and all that, that was a significant drop, and we saw so many stocks just shed a huge amount. But you're gonna get that again?
No.
I mean, so no, I don't think you are.
Well, we got that. That's it in a nutshell. Is if you look at the people that are talking that, it's because their trading career put on the screen started somewhere around here. It started somewhere around here. This is what they COVID they figured out. They said, "Oh crap, it went down." Like they weren't interested. The market's rigged. They started getting their checks right about here. So when they were in their first quarter, the market kind of trickled up, but then they had a bad year. So the year they thought they had things figured out was probably the best year to trade downside. So if they were smart, they probably did, especially options. They probably did trade downside, and that is just their skill now. And they're just caught at the wrong time. They learned at the wrong time, and they're going to get killed. Because they're not doing shorting right. You need to short companies that are bleeding out. We'll talk about that in the last five, separating those. But that's what you need to short. You don't need to short indices at all, or ETFs at all. That just they're built to kind of be the safer play.
Yeah, absolutely. And I really preach that with shorting. That I don't know why anyone was trying to short Carvana at $7. I mean,
yeah,
not much meat. There's not much meat left on that bone at that point. And I feel the same way about something like Beyond Meat right now. I mean, where were you? Wanted to short that? It was $120 or hell, probably double that. I don't even remember its high, but yeah, you're fighting for scraps at that point. So, shorting's hard. It's a bad mindset. I just see they're all so angry all the time, even when stuff goes down. Their attitude is like, fucking finally, what the hell took so long? I mean, they're not even enjoying the win because
no,
they just got wrecked so much on it. So, not a good place to be.
It's hard in general, but the timing makes it even harder for me.
Yeah.
Unless you're shorting all-time highs, but again, you're filling your cup. You're not like taking it all the way down to the floor. Perfect. You're right.
Most likely outcome for an all-time high is for it to do it again. So
yes.
That
yes.
just kind of live by that until you see a trend change.
Perfect.
If you just got to short something.
You ready to get to work, Pete? All right. Hey, like and subscribe out there for more.